Welcome to The Explainer. Today, we're going to figure out what kind of market player you're really built to be. Because in trading, it's not just about what you buy, it's about how you trade. You see, finding the style that clicks with your life and your personality, that's the secret sauce. Picking the wrong one, well, that's just a fast track to some serious frustration. So, think of it like this. Are you in a race? Are you a sprinter? Just all-out explosive energy trying to win in seconds flat? Or are you a marathoner? You're pacing yourself, you're in it for the long haul, with your eyes on a finish line that's miles and miles away. Your answer to that? Well, that's pretty much the key to this whole thing. So we're going to break down three main archetypes. We got the day trader. That's our sprinter. Then there's the swing trader, who's our strategist. And finally, the position trader, our visionary. Let's dive in and meet our first contender. The day trader is pure, uncut adrenaline. Their entire race starts and ends on the exact same day. Their whole goal is to jump in, snag a tiny profit from a small price move, and then get right back out, all before the closing bell. This avoids any risk of something happening overnight. This is a game of speed, and it is all about high volume. And just look at the stats here. It really shows you the insane speed we're talking about. We're not talking days, we are talking minutes. These traders live on hyper short-term charts, and the strategy is crystal clear. Make dozens of trades every single day. The goal isn't to hit one big home run. It's all about stacking up a ton of small, consistent wins. Now, a pace like this demands a very specific kind of mindset. You need iron discipline. When a trade goes against you, you absolutely cannot get emotional and try to win it back. That's a little something called revenge trading, and it is the fastest way to blow up your account. You've got to be completely okay with taking these small, frequent losses. It's just part of the game. And here's a huge hurdle for a lot of people. In the United States, if you're day trading stocks a lot, you get hit with something called the pattern day trader rule. And that means you have to keep at least $25,000 in your account at all times. Bottom line, you can't just jump into this style with a few $100 in your pocket. Okay, so if that high-speed chaos isn't for you, let's slow things down a bit. It's time to meet the swing trader, our strategist. See, they're not interested in all that minute-by-minute noise. They're looking to capture the swings in the market, those bigger price moves that play out over several days or maybe even a week or two. You can immediately see the change of pace here, right? We've jumped from charts showing minutes to charts showing hours and full days. Swing traders are looking for that perfect setup. This means way fewer trades, maybe just a handful a week, but each one is designed to capture a much more substantial piece of profit. It's kind of the perfect balance between action and patience. You know, a swing trader's greatest asset is patience. They have to be comfortable putting a trade on and then, just stepping back and letting it do its thing for a few days. The key is resisting that urge to react to every little price tick. This style is all about quality over quantity, finding those A-plus setups, not just chasing constant movement. And now we meet our true marathoner, the position trader, our visionary. This trader is playing the long, long game. They're looking at the biggest picture possible, trying to identify those major long-term trends that can last for weeks, months, or sometimes even longer. This table just shows the ultimate shift in perspective. Holding periods aren't measured in days anymore. They're measured in months. The analysis is done on weekly and even monthly charts. This all results in very few trades, but the goal for each one is to capture a huge chunk of a major market trend, which means the potential profit on each trade can be much, much larger. To be a visionary, you need incredible patience and just rock-solid conviction in your ideas. I mean, the market's going to be a roller coaster day to day. Prices are going to bounce all over the place. You need the mental toughness to just ignore all of that short-term noise and hold on for the bigger move. This is the absolute definition of delayed gratification. All right, so we've met our sprinter, our strategist, and our visionary. Now, let's put them side by side in a head-to-head comparison to really see what the trade-offs are. Let's start with the one that matters most to a lot of people, time. As you can see, day trading really isn't a hobby. It's a full-time job while the market is open. Swing trading, on the other hand, gives you more flexibility, something you could maybe fit around a 9 to 5. And position trading, it demands the least amount of screen time, often just a quick check-in once a week. This is probably the first big filter for deciding what's even possible for you. Okay, now let's talk about the rewards. This chart shows a really clear trade-off. The longer you're willing to hold a position, the higher the potential profit on any single winning trade. Day traders are stacking up lots of small wins, while position traders are out there hunting for those massive gains that can only come from riding a big trend over a long period of time. And here is the other side of that exact same coin. The number of trades is sky high for the day trader, and it just drops off a cliff for the position trader. It really boils down to this. Are you trading frequency for profit size? You gotta ask yourself, do you prefer a lot of small snacks, or are you holding out for a few giant feasts? So, with all that laid out, how in the world do you choose? Well, it all comes down to asking yourself a few really honest questions. First up, you have to be totally realistic about your time. Got a demanding 9-to-5 job? Kids to pick up from school? Then yeah, day trading is probably off the table. But can you carve out an hour each evening to look at charts? Swing trading might be a great fit. Or do you just prefer a more hands-off approach? That's pointing you straight toward position trading. Next, let's talk about your personality. Does making a split-second decision with your money on the line make your heart race in a good way or a really, really bad way? High-stress environments are where the day trader lives. If you're more analytical and patient, you'll probably find that swing or position trading suits your temperament a whole lot better. And finally, yeah, we have to talk about money. Remember that $25,000 pattern day trader rule we mentioned? For US stock traders, that's a hard gate you can't get around. Swing and position trading have much, much lower capital requirements to get started, which makes them a lot more accessible if you're working with a smaller account. So, what is the single most important takeaway from all of this? It's that there is no best style, period. There's only the style that is best for you, for your schedule, and for your personality. In fact, a lot of successful traders will tell you not to jump right into sprinting. A really common piece of advice is to start on the longer time frames. Learn the rhythm of the market as a swing or position trader first. Build up your confidence, build up your skills, and then, and only then, if it seems like a fit, maybe start exploring those shorter time frames on a practice account where no real money is at risk. This quote really says it all, doesn't it? The goal isn't to be a day trader or to be a swing trader. The goal is to be a consistent and profitable trader. The label doesn't matter one bit. The results do. And those results come from finding a style that fits you like a glove. So that brings us to the final and definitely the most important question. You've met the sprinter, the strategist, and the visionary. You understand all the trade-offs. The only question left is, which path will you explore first?